Thank you for joining us this Friday, the 20th of February. I'm Sophia Mavridis, and I'm joined today by Bell Financial Group CIO, Will Riggall. Will, thank you for joining us again this Friday.
Oh, great to be seeing you again, Sophia. And I think we had a good start to our weekly reporting updates, and certainly we didn't have a boring week last week. And again, the ASX has given us a lot to think about with some big moves in the market. So I'm happy to kick it off and take any questions you have.
Yeah, let's, jump straight into that, Will. It was, the biggest week of reporting season yet, with a long list of companies reporting their earnings. It was a strong week. The ASX 200 up 1.9%. ASX leading global markets again, with the S&P 500 up 0.4%. A lot of sector movements. Energy and telecommunications are up the most. Maybe, we could start with that. So energy continues as Iran tensions, they're bubbling up. What are you seeing with sector movements? What are some key notable movements to talk about?
Sure. Yeah, you're right. The reporting season is, we really get into the weeds of companies, but of course the macro environment can drive us, and we're seeing that with energy as well as the biggest mover this week, which is somewhat a surprise given we're so stock specific with BHP and a few other companies reporting. But yes, there are those bubbling tensions underway, and that has put a bit of support under gold, which again is doing reasonably well this week. So look, while we keep an eye on the what's happening out there in the world, we're very much down to stock specific level, and a lot of what we're seeing in sectors does depend on when these stocks land. So look, healthcare itself was all about Sonic this week, while last week was around CSL. The IT sector has found a little bit of buying support. I'll talk about the platforms, NetWealth and Hub, who had big weeks. But you can also see some of that macro component coming through as well. We had the interest rate sensitive components of the market under pressure this week. So the laggards are there, real estate, and also the consumer discretionary names continuing on from some caution that we heard last week from Nick Scali and others.
And we have seen some real volatility in the market as well. So we've had more beats than misses with what the market was expecting, and companies being punished. You mentioned stock specific sector movements. So what's your view there?
Yeah, it's a really interesting part of how the market's reacting at this point. That underlying shift from last year's winners to kind of the old economy and resources means there's a lot of moving around, which is increasing the volatility at the moment. But you're right, if we stand back, it's a positive reporting season for us at the ASX. We've had earnings upgrades over the last 6 months or so, and this reporting season is actually confirmatory of that move, so it should continue to support our market on an ongoing basis. But you're right, we see some big moves up and big moves down. It's not often that you see the names of CBA, BHP, even Telstra yesterday jumping 4 to 5% post their result. But that's the world we live in now, and hopefully we can give you some context around those. Perhaps I'm happy to jump in and kind of give us a run through.
Yeah, let's do it.
We had a quarter of the ASX 200 report this week, or a little bit over. We've got about 10 or 12 coming out today. The ones that were really interesting were we had JB Hi-Fi on Monday, a bit of a bellwether for the consumer. The market was actually pretty pleased with the result there, and we thought they really showed the quality of the operational performance within that group. While they did flag some caution around the consumer in the go forward, we've seen JB Hi-Fi derate from well above 20 times PE back to around that mid-teens, and then we saw it lift. So it was up week to date, it's up at just a bit under 12%, which is impressive. Tuesday we had Bluescope Steel report. It wasn't so much about the result, but what was important that we had Seven Group come back with a slightly higher bid. So at around 32-35 cents, upping it from 32-35 dollars, up from their $30. They're saying that's best and final, but we'll see how things play out. So that was Monday, Tuesday, and I guess what was interesting as well, we saw BHP report on Tuesday as well.
Yeah.
And I think, yeah, we were, I made a few comments in the paper, which was interesting to see make there. So that was, it was good to be able to, support the broader network and make some comments around the BHP and the companies that we support.
Yeah, for sure. We saw the financial review covered your commentary on BHP. Maybe tell us more about the miners' results, the outlook, or how it impacted the resources sector and any other mining ASX stocks.
Yeah. So BHP, we've seen the resource sector perform really strongly. It's kind of moved from that gold component to the large diversifieds, BHP and Rio Tinto. BHP shot the lights out, to be honest, in their result. They had really strong top line growth, a lot of it coming from copper, and I'll come back to that. But what they did show was actually leverage as you went down the profit and loss statement. So revenue was up double digits, then you had double the 20% plus EBITDA growth. Strong capital control meant that the free cash flow was better, and that all flowed through to a 49% increase in the dividend, which was pretty much the driver of the result. Great news for shareholders, great news for investors, really strong dividend, fully franked. But what's happening underneath is they were able to show the benefits of the transition that the CEO has put in place. Greater than 50% of the company's earnings are now from copper. And so if we look at the difference between iron ore and copper, both great, well-positioned components of the commodity stack, but look, copper's the future. It's trading at a high multiple, and perhaps that can justify and continue to see BHP outperform.
Strong dividend stock for portfolio for sure. Best performers this week, we've had Hub, we've had NWL, and then we've got Zip on the end of the leaderboard. Are there any other key stocks that are worth mentioning this week?
Yeah, I think it's important to just at least make a comment around Hub and NetWealth, which is the ticker NWL. We've had a lot of pressure around this tech sector, platforms, how much disruption can you see from AI? The analysis we're doing internally from our research team run by Chris Savage and Hayden, our sector lead for these names, is just the quality of the network that they have in place and how hard it would be to displace them. And what these two names showed is that there are structural trends going on in this space as money moves away from the superannuation funds and towards these platforms as advisors look for the more efficient approach. So really, really big, strong moves in those names. But I guess if we go back to some of the stocks that are bread and butter of portfolios, Telstra was a good result. Again, dividend is key there. We had Sonic surprise a little bit. There's a new CEO in place that is showing some more capital discipline. So we'll see what they can put in place over the next period. It's been a tough couple of years for Sonic shareholders, but hopefully we can see that quality global franchise shining through. And then Wesfarmers, look, they're a traditionally strong result. They usually surprise somewhat, but I guess what the market saw yesterday and its 4% move down was just some caution as well. That's again going across that consumer discretionary space with the first 6 weeks of trading being slightly less than the market had hoped for.
Yeah. And we're looking ahead. So today we've got 12 companies reporting on the ASX 200. Mineral Resources is one of them, Guzman, Telix Pharmaceuticals. What are you watching out for today?
Yeah, well, we've had 2 of the insurance names report, a little bit mixed. So we'll see how QBE, they are more globally exposed, and they've been the CEO who moved into the position a couple of years ago has been actually on a strong turnaround. So looking for a good result from them. And then Newmont, Mineral Resources will be key. They have been rationalising the capital base, ran into some debt troubles earlier in the year, but of course the lithium price has been on a bit of a tear, which did support Wesfarmers as well. So it'll be interesting to see what Mineral Resources has to report. Guzman and Gomez, always interesting. If you get a chance to dial into the call, you've got a very charismatic CEO there. And Telix was the favourite biotech for a lot of institutional fund managers earlier in the year, but they certainly had a bit of a fall from grace. So let's see what that company can talk to us about today. And certainly I'll be next week as we do a wrap, I'll make sure that I follow up on those companies too.
Absolutely, and a lot to watch today. Well, Will, thank you for joining us. Thank you for your time, and we'll catch you next Friday as well.
All right. Great to see you. Have a great day, everyone. Bye.
Bye.